What's going on, everyone? Welcome to another episode of The Remote Real Estate Investor. I'm Michael Albaum, and today I'm joined by Matt and Alex, two of our agents as part of Roofstock Certified Agent Network down in South Carolina. And they're going to be talking to us today about the Greenville and Spartanburg markets and everything we as investors need to know about it. So let's get into it. Matt Crawford, Alex Fischer, how are you guys?
Man, we're doing great, Michael, Pierre. Thank you guys so much for having us. Good to be here.
Thank you, guys.
Yeah, our pleasure. So I know you because I work with you guys regularly as part of our certified agent network with Roofstock. But for anyone who might not be familiar with who you are, give us a quick rundown who you are, where do you live, what markets do you operate in, and what is it that you're all doing in real estate?
Absolutely. So for everybody out there, welcome to the Roofstock Remote Podcast. As you guys know, Michael, he's a champion of the people. He's the one in the van, rocking and rolling, making it work. But for us, me and Alex, we're the greatest broker team Roofstock has ever seen. I say that lightly, but I do mean it. I think we're very passionate about what we do, how we present the products to you guys as consumers, and as an educational base. We're very thankful for the opportunity. So we represent a couple markets here in South Carolina. It's where Alex and I are born and raised. Alex, you want to add 2 cents on top of that, sir?
Yeah, obviously our hometown is Columbia. Really anywhere in South Carolina. That's where we have most of our experience. And, we love doing nothing more than trying to get out here and make some people some money and find them some good deals. So our go-to is going to be South Carolina areas.
Love it. And why did you guys partner up, and how did you two meet?
Dude, it's such a long story, but we've been kicking it for like 12 years, man. And we're both 30. So we were wee young lads, and our ladies at the time were like best friends. And Alex's wife was always talking to my girl about meeting Alex, and I thought he was strange because he was like a financially adept teenager. Like, Alex had his first house at like 9 years old or like 19, whatever it was. I'm like, dude, this guy, he's going.
Yeah, none of that was true, but all right.
This guy's going somewhere. And me and Alex just kept kicking it. And, Alex was working at one of the top 4 consultancy firms, PwC. And I was out in Denver sort of sowing oats. And Alex, hats off to him. He'd call me like every week, checking up on me, and he's like, Matt, we got to get into real estate. We have the potential. He really convinced me to move back to South Carolina, and fast forward 5 years, we have our own companies now.
Love it. All right, you two. Well, let's talk about Greenville and Spartanburg, South Carolina. It's a market that I'm not very familiar with, and so we're gonna, talk to me like I'm 5 years old. Walk me through are these markets interesting? Why should people be interested in investing and rental properties in these two markets?
Yeah, so I guess the main differences between the upstate and Columbia is property values are a little bit higher. Greenville is an incredibly cool city, especially compared to Columbia. It's pretty big in its own, but there's a lot around Greenville, which would be the mountains. It's convenient to the beach, which is maybe about 2.5, 3 hours away. But also you've got then North Carolina, you've obviously got, Clemson around the area. There's a lot of opportunities in regards to rentals because there are a lot of colleges around there. But our biggest thing is pushing the appreciation. You're going to see that the rents are not keeping up as much with the property values, or at least as quickly. But the good news is they are good opportunities for long-term holds because of the appreciation. And from what we've been seeing, the appreciation there in the upstate in general is just much stronger than it is in Columbia. But the good thing about Columbia is the opportunity for rents because the rents are keeping up with the property values. But I think we're going to see a lot of that stuff slowly, level off a little bit. Just based on how the market's kind of moving now. So then the rents will eventually kind of just end up evening out with what the appreciation is actually doing.
And Matt, who are some of the big employers? I know, Alex, you mentioned Clemson and a lot of colleges around there, but other than college students and college faculty, are people moving to the area for your typical jobs? I mean, are there big employers there?
Yeah. I think, Michael, putting you in the frame of mind of like a new investor coming into South Carolina, and for all the investors, and whether you're 18 years old looking for your first rental or a seasoned investor with 100 properties. I always like to sort of start at the origin story of the market. And Greenville, the upstate in general, is like the textile industry of the U.S., really. I mean, you got to look historically in South Carolina and the South. This is where a large majority of the cotton, of the indigo dyes, of anything a derivative of the textile industry really was created. And that really set its roots into Greenville, into Spartanburg itself. So Greenville still has a ton of products from that era, which include huge textile mills. What that means from an investor standpoint is that you had all this workforce housing. Even my mom, who's from Easley, which is about 25 minutes from downtown Greenville, they grew up on the Mill Hill. And so, as you can imagine, it's perfect substance for the gentrification to happen, And it's not 20 years ago where we could buy a house for $75,000 and now it's worth $500. But you can still follow that development curve that's molding out of Greenville into areas like Easley, fantastic market to look into. The biggest one, I think, the all-star of this podcast for everyone listening is going to be Travelers Rest. And I think Alex knows a lot about this as well, because Greenville, I'm a Clemson grad, right? Clemson Tigers, we're about 30 minutes past Greenville. And so I got to see this beautiful development happen in Greenville, which has just created a pretty high saturated market. So now for any investors and yourself, Michael, I think pushing to these satellite markets that are still quite contingent to Greenville's population and economic drivers makes the most sense. So that's really where Travelers Rest is becoming an all-star market. Low property purchase prices, you're talking 3.2s, 175,000 or less, but really good median rents, almost to the 1% rule. I don't think it's as sexy as here in Columbia. That's just because Greenville has already seen so much more maturation than here in the middle of the state. So that's Greenville. So biggest thing on Greenville, and here we go, Pierre's Drive-In. If we drive in, Travelers Rest going to be, if you're looking at a clock, at 11 o'clock to us. So guys, if you're out there, you're wanting to see properties, I can guarantee if you Zillow Greenville, you're going to see stuff for like 300,000, 400,000 that rents 2,500 or so. Now you go up to Travelers Rest, those economic numbers are totally going to flip-flop. So please feel free to look at these kind of products. It's the same MLS as Greenville. So Alex and I will be publishing properties. And then if we come back to the center of the city in Greenville and look at 9 o'clock on the clock hands, you're going to look at Easley. So it's directly to the left of Greenville, sort of right in the left third of the screen. Thanks, Pierre. Also a great case study for what's happening in this market, as a lot of the renters, the investors, and the development dollars are starting to just bleed out of Greenville, which is sort of a cool analogy, as Greenville really had its foothold in the indigo dye business. So if you can imagine this indigo dye starting to come out of this central geo, Easley's fantastic. You can still find great inventory, but even as Alex and I thought, hey man, let's open up the upstate with Roofstock, Easley's going to be just fish in a barrel. It's not the case. It's still very, very saturated with investment and institutional dollars, which puts Travelers Rest as my number one sub-geo in Greenville.
You heard it here first, ladies and gentlemen. I love it, Matt. And to give people kind of a frame of reference, do you know the population of Greenberg MSA?
Yeah, I think it's almost like 500,000.
Okay.
So it's a pretty massive city. Definitely bigger than, I think it's like the 5th or 6th largest city in South Carolina. I definitely, being a local, think it's like probably number 2 of like most sought after livable millennial culture cities. I think it goes Charleston, then probably Greenville. And, guys, if you're looking for Airbnbs, totally different ballgame. We're talking totally different set of data here. But the short-term rental market in Greenville is off the charts. And I think that is yeah, I think that's perfectly tied to the nightlife and the culture that Greenville has done. And even just to dig a little deeper here, 25 years ago, there really wasn't a main street or a main vein in Greenville. In fact, what they call Falls Park, which is a main park in Main Street, Greenville, is beautiful natural waterfall. It was actually covered by an overpass right here appears on it, Falls Park on the Reedy. So the Reedy River cuts through the city. This used to be covered up. And now in the last 10 to 15 years, they've probably dumped $100 million or more into this gorgeous walkable facility that has these natural features. There's this beautiful suspension bridge, and that has just created this really nice culture that is in Greenville. And I think that's why the short-term rental market really works. If you're looking for higher property purchase prices, but I think your Airbnb models will be a rock star here.
That's really interesting, Matt. And so talk to me a little bit about property taxes, because I think that's something that's always on people's mind as one of a big expense that can either make or break an investment. So how do those work in South Carolina, or maybe more specifically in Greenville?
Yeah, so typically what we do, and a lot of people don't realize this from the get-go, but everybody's looking at Zillow. You can go to any house, you can see roughly what the taxes would be. However, with Columbia, South Carolina in general, the property taxes are different. There's two different types of property taxes. You got an owner-occupied and then non-owner-occupied. And people don't realize the non-owner-occupied is obviously, these big investors that come in. These are the taxes that these guys are going to have to pay, the small guys, whatever. So when you're living in the house and you're looking at Zillow, you're going to see one number, but in reality, that number can essentially be doubled when you start to consider that you're actually going to put a renter in place, which is a huge buzzkill for a lot of investors. But at the same time, once you kind of understand that is the case, now you can kind of work your numbers around. You can you'll look in a different direction for the opportunity, I guess you could say. But typically what we tell people is when it comes to taxes, the non-owner occupied rate is going to be roughly, and again, this is just a rule of thumb, this is not exact, is about 2.5% of the purchase price. That will give you a good gauge on what your monthly cash flow would be. And as you can imagine, what I would say is, the owner occupied tax rate is probably around 1 to 1.5%. So as you can imagine, you do the math, it's almost double what the owner occupied rate is, which is very unfortunate. And that's probably been our biggest hurdle for the South Carolina markets. But again, it just allows us to kind of, I guess, stretch our fingers out to see what we can find in regards to more off-market properties, maybe some smaller homes. But it really does make it more difficult for investors to actually go out and find something, just because it does hurt the cash flow a good bit. Yeah,
that makes total sense. And we talked a lot about Greenville. What about Spartanburg? What should folks be aware of, and where should they be looking out there?
Okay, cool. Let's so we'll drive the car probably about 45 minutes east. And now we're in Sparkle City, baby, which is sort of just a local term, slang for Spartanburg. That I can give no context to. I have no idea why they call it Sparkle City, but it makes for a fantastic nickname.
Totally.
So we're driving to Sparkle City. We're laying it down. And to me, and I think even to Alex's standpoint, I am a bigger fan of Spartanburg than Greenville. Granted, snagging an Airbnb downtown Main Street in Greenville sounds awesome. I think if you're looking to build long-term rental portfolios, maybe 2 or 3 a year, you're wanting to be in Spartanburg. That's just because it's more it's not rural in the sense, but it's more workforce housing. I think Greenville, you're going to be playing with a lot of individuals that are potentially, making 80 to 100 grand a year. Not necessarily looking for a true 3-2 rental, whereas in Spartanburg, it's definitely labor force. And I think you find that labor force in the biggest BMW plant in the Southeast. So BMW, Michelin all have one of their largest manufacturing plants right outside of Spartanburg. I think all the X5 series Beamers in the world are made here in this BMW plant. Which is beautiful. Yeah, so you drive by it, it's this gorgeous setup. So really, really cool. And I think that's driven this workforce class of tenants that you would see. Of course, there's 10 colleges in Spartanburg. And if you were to visit Greenville, you're like, oh man, this place is popping. Like there's Michelin star restaurants. They have a beautiful downtown. You go to Spartanburg, there's like, mom and pop's biscuit company, but what you want to see, and from an investor's perspective, which I think looks good, is right downtown is this brand new 5-star hotel. Super swanky, beautiful rooftop. You walk into it and you're like, oh, there's money here. Something's happening. And so to me, that says that a lot of these development dollars that have been looking around different geos here in South Carolina finally have seen, oh, Spartanburg is a super viable market. I would say maybe it's like Greenville 15 years ago. And talk quick numbers, whereas if you were in Greenville, your 3.2 is $250,000. Your 3.2 here is going to be $150. So I mean, we're talking about $100,000 in price changes. Now that is reflected in the rent rates. That 3.2 in Greenville is definitely a $1,550, $1,695 monthly rent product. That same 3.2 here in Spartanburg, you are going to be looking at like $900 to $1,200. And I think that's just positioned on the type of tenant that we're commonly seeing here. But inventory is easier. You're not going to have such a saturation of buyers, so less bidding wars. So I'm a big fan. And pro tip, bing, 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 for everybody out there listening, I don't know if y'all can make that a sound, but I'll do my own ad libs, no problem. I think that, me and Alex, we have a large acquisition base for different companies. And last 2 years has been the gauntlet with interest rates at 2.3% back in January of 2021. As of this month I just checked, they're like 5.6. And what we're seeing when we're checking foreclosure lists, we're looking at so many different counties across about 30 different MSAs, is things are doubling every single month as far as foreclosures, as far as the evictions that are actually being filed and processed. So what that means for you guys as investors in the audience of the podcast is get your cash ready. I think the bidding wars are finally starting to water down. So whether it is Greenville, whether it is Spartanburg, you're going to see a lot more inventory, and I think you're going to have a lot more purchasing power, especially if you're coming with some kind of liquid cash on the deal.
Okay, good to know. And what areas of Spartanburg really excite you?
Spartanburg.
If you made your number one call for Greenville, what's your number one call for Spartanburg?
Easy shot, right in the heart of Gaffney. So Gaffney is just a subset right out of Spartanburg. I think Spartanburg is old enough to where you can put a stake downtown, throw a 30-mile radius around it, and go shopping. That's how I would look on Zillow. But Gaffney in particular, a submarket, really great.
Right on. And if someone is coming into the South Carolina market just in general, or maybe these two markets specifically, what things should they be aware of? What's kind of common practice, par for the course? Like as an example, out in California, we have termites. And so if you see a little bit of termite damage, that's not the end of the world. You can get it fixed depending, of course, about where it is and how pervasive it is. But what are some things that people should expect to see that might be red flags in their home market that they shouldn't be too worried about?
I'd say around here, one of the more common things that, becomes concerning, it comes concerning to anybody, but it is pretty normal. It's just more foundational issues. Having, cracks in the foundation, unfortunately, is normal. But, and I don't know how it is in California, but I know the second somebody sees, foundation cracks and stuff like that, it becomes something very worrying. But from our perspective, we're like, look, this is normal. There's plenty of companies, don't get me wrong, they are expensive. But there are plenty of companies that can go in and help remediate that. However, even at that point, it's pretty easy to gauge, especially on the inspection reports, how severe it's going to be. As long as it's nothing that's like overall structurally is going to be concerning, then we don't see it being a big deal just because it is normal. But again, that's from our perspective. We've never seen anything major come up. And if we do, we're able to read through the inspection reports and say, hey, maybe we should get one of these guys out here from, foundation companies to go have a look. But outside of that, from our perspective, that's fairly normal on any house you end up going under contract on.
Mm-hmm. Yeah, totally agree with Alex there. We get all the crazy questions too, Michael. A lot from those Cali investors are coming in, and even New York people. I'd say like every time we have a California guy or girl, which we love y'all, and we've even had a couple of really amazing people come meet me and Alex here in South Carolina from the properties that we've helped acquire through Roofstock. So shout out to all those guys, but they're always like, do we need hurricane insurance? Or like, or do you have tornadoes? Which is a regular thing to ask. But now none of that. South Carolina is super chill. Especially Columbia. We're landlocked. Charleston, definitely you're going to have hurricanes. But Greenville looks good. I think on average it's like 5 inches of snow, which is hit or miss. So very mild climate, and even sort of changing that question of as globally for South Carolina as an outdoor investor, what I would say to make it interesting is like follow football. Yeah, it was just about, football I think is really important to the nature of these different cities. So, Clemson University, if you're paying attention to that college when they were rocking, it created this huge investment opportunity, like massive. I cannot express how big the real estate investment opportunity that was created off that football program. And it's the same thing with the Charlotte Panthers. They're building a brand new practice stadium in Rock Hill. Investors are looking at these different data metrics. And even in Columbia, South Carolina, where the University of South Carolina's football program is, I would just pay attention to those sort of fun monikers. And that's just another lens to look at investing and what is important to that specific geo. And those are just one of the very relatable things here in the South Carolina market.
Oh, that makes total sense. I know one of our other co-hosts, Tom Schneider, he loves looking at sports teams and where they're moving and where they're building stadiums, because that's a huge, huge indicator. Like you mentioned about like the hotel, big money going into an area. That's great. That's great. I'm curious to know from your guys' perspectives, what should buyers be aware of? How can they be more competitive? And how can they work better with you all and your teams to be competitive and win offers?
Well, so I'll actually say from my perspective, just to kind of give my quick little 2 cents, because we do see this daily. But our biggest thing is, we've got a team of people that are behind, the whole coordination piece. Our number one goal is to get offers out the door. At this point, it's kind of like you got to. Unfortunately, this isn't like it was 2 years ago. Maybe you can make an offer on a house and, there's only 2 other offers on it. Now it's like you make an offer on a house and now there's about 20 to 30 other offers on it. When you consider in these bigger markets like Columbia, Greenville, and Spartanburg, this is where all the big institutional guys are. And so these big institutional guys are buying in cash, which means, if you're buying through financing, it's going to make it very, very difficult to be competitive, especially with a lot of these guys doing, 3-day diligence, 5-day diligence, which is something we don't really recommend, mainly because, it's very difficult to even get anybody out there, then get a report back. So our biggest thing is, and kind of what we feel like we can control on our end, is the amount of offers that actually do go out. So instead of just pinpointing and finding like, hey, this is my favorite property, I want to try to win just this one. Our goal is, look, you just got to start, shooting out offers, which is what our team is capable of doing. And then just hope that one sticks. And don't get me wrong, obviously we want the offers to be calculated, but if you kind of get this tunnel vision and try to purchase one house and try to win that one house, you're going to be disappointed. There's nothing wrong with just trying to shoot out some offers. That's what our team can do. And all you got to do is just let us know, or go to Roofstock and just start clicking on, hey, I want to make an offer here. I want to make an offer here. But to your point, people are getting overbid. The market right now is kind of unfair just because of these institutional guys. So if there's anything we could at least just give somebody as a takeaway is just make offers. Right now it's a numbers game, and hopefully one will stick, but you'll be a lot more likely to stick something than you would if you just try to, kind of become narrow vision and try to make one offer at a time. It's just going to make it very, very difficult, which is with the way the market is now.
Yeah, makes total sense.
Well said. I would say the same thing.
I agree. That's perfect.
Yes, what he said.
Awesome. Well, guys, any final thoughts, tips, tricks, tidbits for folks that are listening, things you think you want people to be aware of South Carolina market?
I think the, quick sentiment, to leave with you guys out there is, me and Alex have been doing this, for quite some time. I know we're young in blood, but we're old in experience. We're, probably past our 25th 100, transaction we've been a part of. All these have been investment based. So we're not a residential agent. We're both brokers. So we really have put this as our passion and our lifeblood to support our families. So I think being a resource for you guys, your boots on the ground, providing all of our resources. We do our own flips, and we know the headaches with the flips. We've gone through several reno teams, and we've had to create processes and procedures to make sure that we're hitting our numbers and our timelines. And all of that experience and the physical resource of these teams, we'd be more than happy to open up that toolbox for you guys. Same thing with lenders. We're dealing with tons of Roofstock transactions and else and otherwise. We've pinpointed the best of the best. So that being said, I'm really, really proud of the team Alex has helped create, the toolbox that we've pieced together, and the family that we've met at Roofstock. And we want you guys to dig in the toolbox, come and play. And I think we do it a little different, and that's what makes us stand out. I think not just selecting property by property like Alex was saying. Look anywhere. Look on Craigslist, Zillow, wherever you want to, and send us 5 properties. And we don't mind drafting up 5 offers, going out fishing. And if one hits, great. If several hit, buy them all or pick the best one, and we can drop during due diligence. The biggest thing, and I will put this star on our chest, is we've never lost earnest money in our entire career. And that's because of
that's pretty impressive.
Team, the systems, and the communication. That's over 2,000 deals we've done. We've never lost it once. And I remember Alex was like, dude, we're never going to, because he comes from that consultancy background. He has processes and automations to protect you guys. And so love to show you these features, talk shop. Let's rock and roll. Really appreciate everything.
Right on. What's the best way for folks to get in touch with you guys?
And it's going to be acquisitions@evernest.co. So evernest.co. And how I would like to do it is just shoot us an email, and the team will set you up a call with me and Alex if you want to just chit chat. Or if you just want to jump into the ring, like email 5 properties and say, hey, I want to run these through the BYOP program with Roofstock. Heard your podcast. It was very strange, but fun and entertaining. And I hope my dog's all right. And we'll hook you up, man. It's just like getting started. So that's that's just how easy it is. And we'd love to show you South Carolina. Another quick thing is, me and Alex do this across about probably like 10 states now. We're from Texas to Florida and up the southeast coastline. And I still very much like South Carolina, and the data shows it has a lot of fruit. So come and join us, and let's get financially free.
Right on. Well, thank you two for taking the time, hanging out with me. I really appreciate it, and can't wait to see where we both go from here.
Michael, you're the greatest. Pierre back there driving the ship. Thank you, sir. And to everybody tuning in, keep catching the next episodes, and good luck investing.
Right on. Thanks, guys. Talk soon.
Thanks, guys. See ya.
Okay, everyone, that was our episode. A big thank you to Matt and Alex for taking the time, hanging out with me, and giving us all a driving tour of Spartanburg and Greenville. Definitely 2 markets that are worth checking out. As always, if you like the episode, feel free to leave us a rating or review. Those are super helpful for us, and we look forward to seeing you in the next one. Happy investing.